Welcome to our channel. Today, we are going to update gold price movement for coming days.
Alright folks, listen up. Today is July 28th, 2025 and all eyes are on one thing: gold. The shiny metal has been dancing around trying to make a big move, and right now we're at a critical tipping point. Think of it like a championship game and the score is tied in the final seconds. Gold is pushing, it's shoving, and it's staring down a massive wall. That wall, my friends, is the 33.50 price level. This isn't just some random number I pulled out of a hat. No, this is a major resistance level. It's a price where, in the past, sellers have jumped in and pushed the price right back down. It's a line in the sand. So why should you care? Because what happens next could send this market flying in one direction or tumbling in the other. When a price gets stuck under a strong resistance like 33.50, it tells you there's a battle raging between the buyers, the bulls, and the sellers, the bears. The bulls are trying to push the price higher, believing gold is worth more. The bears are betting against it, selling their holdings and trying to make a profit as the price falls. The tension is building, and one side is about to win. This is where fortunes can be made, but you have to be ready. You have to know your game plan. Understanding these levels is everything in this game. It's your roadmap. Without it, you're just driving blind, and that's how you get hurt. The 33.50 mark is a psychological barrier. It's a point where traders have made decisions before, and they're likely to do it again. If the price can't punch through this ceiling, it's a sign that the buyers are running out of steam. It's like a boxer throwing punch after punch and getting tired. Eventually they get exhausted, and the other fighter takes over. We are watching for that moment of exhaustion or that powerful breakthrough. The next few days are absolutely crucial. We're not just watching numbers on a screen, we are watching a story unfold. Will the buyers find the strength to smash through that 33.50 wall? Or will the sellers hold the line and send gold retreating? Every tick, every dollar move from here on out is part of that story. Don't take your eyes off the prize. This is the kind of setup that can define your portfolio for weeks to come. The stage is set, the players are ready, and the main event is about to begin. Let's get ready to make some money. Now let's talk about the other side of the coin. What happens if gold gets to that 33.50 door and the bouncer says, "Not today, pal"? This is the bearish scenario, and you have to be prepared for it. If the bulls fail to break that resistance, it's a huge sign of weakness. It tells you the sellers are in control. They're flexing their muscles, and the price is likely to head south. In this situation, the buyers who bought in recently will start to panic. They'll see their profits disappear and will rush to sell, adding even more downward pressure. It's a domino effect, folks. So where does it go? The first place I'm watching is the 33.20 level. Think of this as the first safety net. It's a support level, a price where buyers might step back in and try to stop the bleeding. It's a floor. If the price was climbing a staircase and slipped, 33.20 is the first landing it might hit on the way down. This is a logical target because it represents a previous area of interest, a place where the market paused before. If sellers push the price down from 33.50, this is their initial goal. We could see a quick and nasty drop to this level as the momentum shifts. But what if that first safety net breaks? What if the selling is so intense that the price slices right through 33.20 like a hot knife through butter? Then you look to the next level of support, which for me is down at 33.09. This is a more serious support level. If we get here, it means the bears are having a party and the bulls are running for the hills. A drop to 33.09 would confirm that the uptrend is in serious trouble and that a deeper correction is underway. This isn't just a minor pullback anymore, it's a full-blown retreat. Remember, the market doesn't care about your feelings. If the buyers don't have the firepower to break 33.50, the path of least resistance is down. The bears will smell blood in the water and pounce. Your job is not to fight it. Your job is to see it coming and protect your capital. Watching these support levels at 33.20 and 33.09 will be your guide. If one breaks, you look to the next. Stay vigilant, because when the momentum turns, it can turn fast and furiously. Don't get caught on the wrong side of the trade. Okay, enough doom and gloom. Let's talk about the fun stuff. What happens if the bulls come out swinging and smash right through that 33.50 wall? Booyah! That's the sound of a breakout. If gold closes decisively above 33.50, it's like a rocket ship clearing the atmosphere. All that selling pressure that was holding it down is gone. This is a majorly bullish signal. It tells the entire market that the buyers are in complete control and are ready to take prices much, much higher. The bears will be forced to cover their short positions, which means they have to buy back, adding even more fuel to the fire. Once we're clear of 33.50, where's the first stop on this rocket ride? I'm looking at 33.75. This is the next logical target. You have to think in stages. A move to 33.75 would be a solid confirmation that the breakout is real and not just a fake out. It's a psychological level where some early buyers might decide to take a little profit off the table, so we could see a small pause there. But make no mistake, breaking 33.50 opens the door wide open for this kind of move. It signals a new leg up in the trend, and traders who were sitting on the sidelines will jump in, chasing the momentum. But why stop at 33.75? If the momentum is strong, we could be looking at an even bigger prize. The next major resistance level I'm targeting is 33.95. Getting to this level would mean the bulls are on a rampage. This is where you would see the headlines start screaming about a new gold rally. A move to 33.95 would represent a significant gain and would turn any remaining doubters into believers. It would solidify the new uptrend and set the stage for a potential run at the next big round number, maybe even 3,400 or higher. This is the blue sky scenario every bull dreams of. So, the game plan for the bulls is simple. We need to see a strong, confident push through 33.50. Not a weak little poke above it, but a powerful surge. Once that happens, the path is cleared for a run towards 33.75 and then 33.95. This is how you ride a winner. You identify the key breakout level, you wait for confirmation, and then you ride the wave of momentum. This is an explosive setup, and if it triggers, you do not want to be left behind. Get your shopping list ready, because this bull might be about to run. Now let's be real. These price levels don't exist in a vacuum. The market isn't just a video game. Real-world events can come in and completely change the picture in the blink of an eye. What are the big movers for gold? 2 words: the Fed. Whatever the Federal Reserve says or does about interest rates is huge. If the Fed hints that they might cut rates, that's like pouring gasoline on the fire for gold. Lower rates make gold, which pays no interest, more attractive to own. So a dovish statement from the Fed could be the catalyst that blows the price right through 33.50. On the flip side, if the Fed comes out sounding hawkish, talking about raising rates to fight inflation, watch out below. That could be the pin that pops the gold bubble. Higher interest rates make holding government bonds more attractive than holding gold, so money would flow out of the precious metal. This kind of news could stop a rally dead in its tracks and send the price tumbling back down toward those support levels we talked about, 33.20 or even 33.09. So, you absolutely must pay attention to what the central bankers are saying. Don't get caught off guard. Then there's the other big monster in the room, inflation data. The Consumer Price Index, or CPI, is a massive report. If that report comes in hotter than expected, showing that prices for everyday goods are rising fast, people get scared. They look for a safe place to put their money, a safe haven that holds its value. And what's the classic safe haven? You got it, gold. A surprise jump in inflation could easily provide the firepower needed to break that 33.50 resistance and send us on a run towards 33.95. People buy gold to protect their wealth from being eroded by inflation. So, while we're watching the charts and focusing on that all-important 33.50 level, you have to keep one eye on the calendar. Any major economic news, especially about inflation or statements from the Fed, can act as a massive catalyst. These events can either confirm the technical picture or completely wreck it. A smart trader knows that the charts tell you the what, but the news often tells you the why. To win in this market, you need to understand both. Stay informed, stay nimble, and be ready to react to whatever the world throws at us next.